Okay, can you guys see my mouse moving around?
Yes.
Yes.
Okay. All right, guys, so we're going to talk about the 50 EMA bounce trades today, okay? So that's going to be our first course topic. It's going to be the one of the easiest setups to figure out, to find on the charts, but we'll go through very quickly what it is first, and then we'll go through the rules, and then some examples. So it's called the intraday 50 bounce ID 50 on the 15-minute chart. Okay, so this is a trend continuation setup, meaning like it'll be after you find an anchor like M or W reversal, then you're going to look for a continuation setup in the middle of the cycle. Okay, so it's the first pullback after an anchor formation, and we'll go over an anchor on the charts, but that's like an M or a W. This pullback occurs in all the time frames, so it can be on the M15, which we call an ID50 or intraday. On H1, we call it the 50-50 bounce, okay, or the 1 hour bounce. And then it's also on the H4, which is called the H4 bounce. Okay, so three different types, and there's some rules that we have for these. So the rules are that you must have an anchor present to the left. Okay, the 1350 EMA has to cross. And then the first pullback to the 50 EMA has to be 25 to 50 pips. Okay, and we like to see a fast, quick move back to that 50 EMA that will signify, inducement, trapping, shift by the market makers. Okay, so we're going to wait for the price to bounce or trap off that 50 EMA, and then we're going to look for an entry trigger, and that's going to be either railroad tracks, some kind of star pattern like a morning star or evening star, cord of wood, or a shift candle. Okay, and it's going to close above or below the 13 EMA. Obviously, depending on if it's a buy or a sell. And then we're also going to have TDI confirmation. Okay, and that's an RSI crossing over the signal line in the direction of the trade. Okay, so we're going to look at some examples. So this is what I talk about when I say an anchor. So look at this big M anchor, right? And then you're going to look for the 13 EMA to cross the 50. Okay, so the 1350 cross. First pull back to the water. Okay, and it's better when we get two pins. Sometimes you only get one. That's a little bit weaker. All right, but you want to see two pins to the water at least, if not like a trapping activity, like a whole candle going above, closing above it, and then the next candle closing back below like that. So we want to see trapping activity. We want to see pins to the water. That's the first pullback. We want to see 25 to 50 pips at least from that. Okay, and then you're going to look and you're going to confirm with the RSI that the signal line is crossed over. Okay, so crossing down in this case because we're going down. So RSI crossing down over the red signal line, and the shift candle closing below the 13 EMA. It does not have to cross below the market baseline. Okay, so it's not like an M or W where it has to go below the market baseline. All it has to do is cross the signal line, and that's it. Okay, so M anchor 1350 cross, first pullback 25 to 50 pips. There's your entry, close below the 13 EMA. And if you ride this down, well, your stop loss goes above the shift candle right here. Sorry, you can put it above the EMA if it's close. It's a safer stop, but generally just above the shift candle is good enough. 3 to 5 pips above the shift candle. Okay, and then you just write it down. You can do the EMA trail like we do, trail to 13 EMA. Okay, and then if you take it all the way down here, you've got a 50 pip trade. And if you happen to click out with using the 13 EMA trail, you still made 30 right up here. Okay, and this was EJ a few weeks ago, a couple weeks ago, right at the beginning of the month. All right, next example that we have. So this is a example where there's also a 5200 cross, okay, which makes it a stronger trade. So if you happen to see there's your W. This is your W anchor. Okay, it's a big wide anchor, right? There's a W within a little W, so you have a one leg and then a two leg W here, and then here's your 1350 cross. Okay, your first pull back to the water. This one went through the EMA and went above, right? So this is the trapping we're talking about. We want to see it bounce off, or we want to see a trap, right? And now this is our shift candle, okay, and our entry. In our entry, we need to look at the RSI, RSI and the TDI has to cross above the signal line. In this case, it also crosses above the market baseline, which is even better. And we also get a 5200 cross when it starts to go up, right? And you can sometimes you even get it to cross before, and that's even better. So like if you get a cross before or after the 1350 cross, your entry rather, not before this cross. If it crosses before your entry, it makes it stronger. If it crosses after your entry, you know you're in the right direction, right? So it's going up. And you ride this to the top. 35 pips here at the solid 0, 0 figure. And if you wanted to take it further, and you trail the EMA, you can get up to here, 55 pips to the top here. Okay, and if you exit out, 13 EMA across the candle crosses the 13 EMA exit, you still made 40 pips right up here. Okay, next example. Sometimes we get an anchor that's pretty ugly looking, like this, right? So we have an ugly W-ish looking anchor. This is not really looking like a pretty W, but it's still an anchor. Okay, so this move anchors the continuation. So you get a W, then you get a move up, you get a 1350 cross. Okay, huge Asian box. This was news driven, obviously. So this candle was spiked up by the news, which gave you this humongous Asian box with 102 pip range. You got the 1350 cross. From the top down, pull back. First pullback touches the water, another trap through. Okay, and then a big shift candle through the 13 EMA, closes above, and we're going to confirm our TDI right here with the RSI signal line cross, right? And this one also happened to go above the market baseline. So then we can go up here. First target to the boot tracer, 45 pips. And if you kept going to the top, you could have got 65 pips right here at the 50-figure dotted line at the ADR high level. And if you got greedy, you lost. You lost your money. No, you set your trade to break even, honestly, but you know, this candle probably took out most of your profits if you held past this point. This was also probably news that took this down. So we got a news-driven candle up, and then news right afterwards taking it all back. Okay. Next, so we're gonna do this one together. You guys can open your mics for this and just kind of go along together with me. So far from the rules, if you guys remember, what are we looking for first on this? An anchor, right? Good. So we want to look for an M anchor on our top, and then what do we look for next?
1350 cross.
Correct. Right, so that right there is your 1350 cross. And then?
Push to the water.
Okay, push to the water. So we want the first pullback to the water. It needs to be how many pips?
25.
25 to 50.
There you go. 25 to 50 pips. First pullback to the water. We got to bounce 2 pins, right? And now what we're looking for? We're looking for
Close below the
200. Oh, yeah, close below 13.
Okay, close below 13, and then?
confirmation.
There you go. Okay, so we got an entry here, close below the 13, and then we got an RSI cross the signal line down below. Okay, so good job. If you took it down there to the bottom there, 50 pips on that trade, riding it the 13 EMA, and if you closed out right here and happened to get the 13 EMA exit, which I call 13E, you still made 35 pips on that trade. All right, good job. So this can also happen on the H1. Okay, so we'll call that an H1 50-50 bounce, and the same rules apply as the ID50. So we're going to look at some chart examples of that, and if you catch one of these, you can get some massive pips on an H1. So this is USD JPY, okay, and we're going to do this one together also. So where do you see, what's the first thing we look for?
Anchor point.
Anchor. Okay, so what kind of anchor do you see on the chart?
A big old W.
W.
All right, big old W. So right there, it's kind of ugly too, right? Actually, we have two anchors here. We have one here and then one here, so make a big wide W anchor. So kind of like a sideways motion, but a big W anchor. All right. And then we're looking for our, what's next?
1350 cross.
There you go. 1350 cross. Okay, so we ride this up. And then our first pullback to the water, trapping through the 50 EMA. Our entry here, we have our candle close above the 13, and then we're going to confirm with our RSI that crosses the signal line. Okay, and like I said, this doesn't have to cross above the market baseline, but it's better if it does. Obviously, it's stronger if it does. Okay, but it doesn't need to cross the market baseline, which is this yellow middle line here. All right, so close above the 13 and your entry there.
The signal line is the orange one?
The signal line is the orange, yes, that's correct. It should be red on your charts though. I don't. It depends on what your yeah.
Yeah, it's red on my chart.
Yep. Okay, so then we take that up. You can get, this is a good one, 90 pips on this one, right, on this solid line there. If you happen to ride it all the way up here, like a champion, you got 170 pips at the top. And if you did the 13 EMA exit rule, right there, you still made 140 pips, right? So H1 charts, obviously, you're going to make more pips because it's the H1 chart. You know, you're also going to have bigger stop losses. So on your entry here, you're going to put your stop loss below this shift candle, like, you know, 3 to 5 pips below this shift candle here. That is about 30 pips or so, right? Because from the distance from this line to this line is 25. So we're looking at about 30, 35 pip stop loss for a potential, you know, 90 to 170 pips, right? So higher time frames, you know, larger pips, and you're also holding for a much longer time. Now you got to think this line here and this line here denotes 1 week. So if you're holding this trade, you're probably holding it 3-4 days, maybe like on a Tuesday, holding until like a Friday, you know, and getting out on Friday. So, you know, it's like a swing trade, holding for a few days to get this kind of the pip number that you're getting. All right, let's look at the next one. So this one is NZD USD, right? NU. On these kinds of pairs where the ADRs are really low, I kind of like to trade these setups because you're looking for, you know, big pips, but on the higher time frames, and with a small ADR, finding a setup on the M15 really, you know, doesn't give you a whole lot of profit. So you can trade the H150 bounces on the smaller ADR pairs and look for those setups on the smaller ADR pairs. Okay, so where's our anchor this time?
Clean looking W on the left there.
There you go, right there. So we got an anchor, and then we have the 1350 cross right there. Okay. And then we look for our first pullback to the water. Make sure it's 25 to 50 pips. This one you kind of get 1 pin, 2 pins, almost barely just got that second pin or first pin on the water, but the second pin seals the deal right there, right? So after that pin to the water, that's your first pullback. Then you get your entry right there, close above the 13. Okay, and now this again, your stop loss is going to be a little bit larger, right? So, sorry, whoever has their mic open right now can just mute because I'm getting some feedback. Okay, so or maybe I'll just mute you myself. There you go. Okay, so your stop loss is going to be a little bit bigger. So this from this line to this line is 25 pips, right? So again, you're looking at a 30-ish, 30, 35 pip stop loss, okay? And then if you're riding it to the top, you're going to get, oops, where's my, oops, sorry, we have a RSI crossover, forgot about that. RSI crossover, cross above the signal line, confirms this entry, close above the 13. You're riding it to the top, you get 85 pips on this trade to the 50 dotted figure. Okay, if you're doing the 13 EMA exit, okay, closing below this candle exit, then you still made 65 pips on that. All right. I saw some questions for, or maybe it was questions, I'm not sure, but I'll get to the questions at the end, unless it was somebody telling the person to mute their mic. Okay, so we can also look at trades that did not play out, okay? And then we took some trades yesterday that didn't play out, and they were ID50 trades, okay? So we're going to go over those trades because it's important to look at trades that did not work out as well, because you're going to get setups that don't work out, okay? That's part of trading. They're not always going to work out. They're not always going to be 100%. But you know, the key is to minimize your losses on things like this, right? So this was our EU when we came out of the Asian session on Tuesday, which was yesterday, right? So we had three pushes out of the box, okay, and they gave us a spike, a V spike, right here, and then into like what I said was this is called a half a Batman W formation, okay? So this was our anchor for our W, okay? And then up here, where our first pullback down here, it was just about 28, 29 pips, almost 30 pips to this water here, okay? So first pullback to the water, and then this was our close above the 13. We had an RSI cross over the signal line. This is where we took our entry. Now we only got, I think it was like 10 pips on that before it reversed down and it closed below the 13, so we killed the trade, right? So we lost about, I think, you know, it wasn't like it was like a 3 pip loss or something like that. It wasn't that big, but at that point, that's where we lost the trade. And the reason why this didn't work out, there's not really any reason why it didn't work out. It's just that it was a ranging pair. EU was going sideways. You can see the EMAs were not really you know, they weren't fanned out. They weren't very, I guess, uniform. And when you see EMAs crossing up and down like this, all you can say is that the market is ranging and choppy, right? There's no, you followed the rules and you still did everything right. It's just that the setup didn't work out. So, you know, you're gonna get trades like that from time to time. Don't you know, beat yourself up about it. You just take the next setup. If you see another setup, you take the next setup. Okay, so that's one of the trades that did not work out for us. Another trade that we took was this one, which was USD JPY. Okay, and this was a let's see, out of the Asian session, we came out, did not come out of the box anywhere on the Asian session. So off the bat, it didn't really give us any kind of pattern. We weren't really looking for anything on UJ because during London it doesn't really move. You could see that, right? Like there's really no volume on UJ in London session. So when it came out to New York session, okay, we had the 1350 cross here. Okay, this was our anchor. Oops, I'm gonna have to. What was that? Okay. Okay, so this was our anchor. Okay, Asian session. First leg, London session, second leg, M, 1350 cross here. Okay, first pullback to the water. That was definitely, let's see, I think it was around, this is 45 pips, so I think it was pretty close. It might not have been actually 25 pips, I'm not sure, but it was pretty close anyway. But that's one of the reasons why if you don't get a strong pullback, like generally 25 to 50 pips, that's your you know, minimum. But if it's less than 25 pips, sometimes it's not as strong. And with a pair like UJ with an ADR value of you know, 66, getting 25 pip pullback on an ID50 move is tough to do. So on a lower ADR range pair, you might not always get 25 pips pullback to the water. It might be less. But then also know that when the move comes down, you're probably not going to get a lot out of the move as well. So once this came down and closed below the 13, we got our signal cross below the signal line. Then that was our entry right there, and we took that. That came down also about 10 pips, right? Same thing as EU, and then started to roll back up. And when it did that, we killed the trade, and we took a small loss on there, right? So couple of trades that didn't work out, and a couple reasons why was just, you know, like I said, markets right now volumes are really low in the summertime. European countries are on vacation, not a lot of liquidity going on in the markets, and that's just the way it is in the summer. Things pick back up in the fall, but setups like this, especially continuation setups, tend not to work out. But at least you know, you guys know why we took the trades we did, and why they didn't. You know, sometimes they just don't work out. So those are all the examples there. So that's pretty much it for the ID50. So if you guys have questions on that, you guys can open up your mics now. You can let me answer some questions for you. I can go back to some of those chart examples if you want me to, and we can look at them, or just let me know.
Hey Jeff, can you just go back one slide?
Sure.
Just the last UJ.
This one?
Yeah, the ID50 in Asia.
ID50 in Asia. This one?
Nope, in the Asia.
Oh,
blue
here,
line.
this one.
You got an anchor, you got a cross, you got a big pullback.
So we got the M anchor here. We got a 50 cross here. Okay, then a pull back to the water. But we're looking for a short there.
You get one right
here.
right before the jump. Right there. Oh,
right here.
There. I don't know what TDI is doing right there. I haven't looked.
Yeah, let's see here. Cross. So like this candle would have been first, and it's close. Yeah.
Yeah.
It's close, but if you took that, your stop loss would have been up here. You would have got stopped out right here.
Okay. That's exactly what I was going to ask. Thank you.
Yeah. It would have worked out if you let it ride, but I mean, you just don't know. Right. So you could have taken the entry back down here if you were, brave enough at that point.
Okay. Thanks.
Yep. By the way, that's what those little arrows are on your charts. These little arrows are signifying 1350 crosses.
Yep. I just now understand the use.
Right. All right. Anyone else?
Jeff, can you go? I think it was euro dollar.
Euro dollar.
Yeah.
This one, right?
Was it this? No.
No.
What was the pair? Was it? I think it was a 50-50 ID 50-50 trade.
1 hour?
Yeah, 1 hour.
Was it this one?
The Aussie dollar.
We had USDJPY, and we also had
yeah, I think it was this. I just wanted to check where the entry was on this one.
Okay, so your anchors here, 1350 cross. Yeah. This was your entry right here. So the first pullback to the water is here.
Yeah.
Okay, and then this candle closed above the 13 EMA right up here. So this candle was your entry.
Okay, I don't think it was UJ. There was another one where I think the candle closed above 13 EMA, but the white arrow pointed to an entry 2 candlesticks later. So I just wanted to know why that was.
Oh, I think it was just because of my positioning on the candle. But I'm pointing to the close of the 13 EMA. I'm not actually specifically pointing to any candle.
Okay, so as soon as the candle closes above the 13 EMA, you can enter at that point?
Yes, as long as you get the RSI cross and you have the other conditions met.
Okay, got you. That's fine.
Okay. Let's see who else. Anyone else have questions?
Hey Jeff, how often do the on the lower ranging ADR pairs?
Yeah.
How often do those 1 hour sit-ups present themselves during the week? Does it happen, frequently? Like in the fall, less in the summer, or
definitely less in the summer. But you got to look on. You can backtest on the charts. That's one of the reasons why we're doing these classes. You can go through these examples and backtest on the charts and see how many of these play out on certain pairs. So yeah, and that's one of the things that with like a lower ADR pair. I mean, these are perfect setups. It's just that they tend to take a while to play out, right? Because you're waiting. You might be waiting days for a setup to play out, but once you do catch one, it's definitely worth it.
Yeah, that'd be something good while I work, especially with it moving in slow motion. I can easily manage it.
Yeah. Okay. What's the 50-50 bounce? The 50 bounce is so it's the 50 EMA. It means it bounces off the 50 EMA, and it also bounces off the 50 static on the TDI. Okay, so you can see like every one of these examples, this RSI will trap through or bounce off of this 50 static line on your TDI. Okay, so if we go back to some other examples, like here, okay, so you can see on this bounce right here, this touch of the water to the 50 right here, it touches the 50 static up here, right? So you can go back on these charts and back test them and test these. One of the things that invalidates the setup is if it doesn't touch the water, okay, like if it's just like barely touching it, doesn't touch it with a pin, or doesn't touch it with or doesn't go through it and come back down, or if the space between this RSI here and the 50 static is like 1.5. And if you guys use your crosshair tool, okay, just like you're trying to measure out pips, and you measure the distance from this RSI point to the static 50, if there's a gap in between that space there, more than 1.5, don't take the trade, because that's not as reliable. You want it to be touching or trapping through this 50 static and bouncing down through it. That's what the bounce means, basically. You want it to bounce. Okay, let's see. Are they highbrow? I mean, yeah, it's relative, right? You want to trade with the trend. Try not to trade these against the trend. Generally, they will be with the trend though, because you're going off an anchor move, and you're going with the trend. So, but sometimes you'll find 1350 crosses, and then you'll forget that you need an anchor, or you'll forget that you're supposed to be going with the trend, and those are less accurate, and those setups probably won't work out as much. On the H1, do you have any special TP1 before? Yes, 2 candles to the water, Angela, correct. Do I have a special TP1? No, it's the same. I use the same TPs as I do for my M15 setups. I look for EMAs, right? Or you can look for the solid lines, right? Or specific marks. On your charts, we have these indicators, right? These weekly lines, week opens, previous week opens. On the H1 charts, it's a lot more likely that you're going to hit one of those areas. So if you can look for those areas like this previous week open, or this like 50 figure, like 145.50, 145.00, or these ADR lines, okay, try to look for those kinds of targets on the chart, and then just try to aim for a few pips, before them, so that you don't have to, because sometimes they won't really go to it, right? Sometimes like they'll come just before it and then reverse down. So you never know. Okay. Anyone else?
Jeff, how do you use the 200 EMA on the 15-minute chart?
How do I use the 200 EMA on the 15-minute chart?
Yeah.
In terms of
trend direction.
Okay. Well, like it depends on what are the other EMAs are doing. Okay, if the 200 EMA is like on top like this, that means I'm trading against a downtrend. So this kind of like scenario, like this 1350 cross with this ugly anchor, this is one of those setups I was talking about where you're trading into a trend, right? So you're trading against the trend. So yeah. So like if this 13 EMA crosses, we get a pullback. I'm wary of taking take profits above this 200 EMA. But as long as it's trailing the 13, I'm okay, right? If I hit the 200 EMA and it closes down below, then I know I'm probably going to kill that trade. But if it keeps going, then I'm okay. So I use the 200 EMA as as the big trend, right? If it's below it, we're taking we're in a downtrend. If it's above, we're in an uptrend.
Okay. And you can take profit at the 200 at that pin, right?
Yes, you can. So this is it's a big candle. It's not I don't know. Let's see. This is probably only like 20 pips. Won't be a big profit. But even if you do get to this point, like there's no reason for you to click out there yet, right? Just because it hits that EMA, there's no reason for you to take that profit yet. Like until you see some kind of like move backwards or hesitation. Like this at one point was a full red candle, right? To give you this wick. So this might have scared you at that point, but just wait for it to close below to cancel that trade. Don't don't click out too early, because then it comes back here and then you saved yourself, all these pips.
Yeah, when it closes below, do you exit the trade as it closes? Like, let's say you're in a buy right there, and that candle closed below the 13 EMA. Would you just close your trade, or would you leave it?
I would wait. I would wait and see what it does from there. If it closes below, because sometimes it closes below and then it automatically starts jumping back up again, right?
Yeah.
So just like gauge it. I mean, you're gonna lose maybe a few extra pips if you let it go down, but once you see it starting to go down, then you can exit out of the trade. The whole point is just to minimize your losses. If it's not going to go your way, and if it does, if you close it and it goes, the way you want it to go in the first place, you get frustrated. But that's the way it is. You can just always, you find another entry on another pair, another setup.
Yeah, that's the reason why I asked if you personally would just close it as it closed below the 13, because sometimes it would just create a railroad, and I'm gonna get frustrated.
Yeah. Okay, any more? We got one more. EMA and TDI. Okay, so I have a TDI video that I'm working. Well, actually, two videos, because this is a two-part video, and I've been working on it forever, but I haven't been able to get it done because of everything that's been going on. But the TDI is really really helpful in taking trades and finding direction. But the thing is that you have to also look at TDI on the other time frames. Just looking at the TDI on the 15-minute isn't the full story. So when you're looking, when I have the charts on my screen, like 4 charts side by side, I don't have a TDI on the daily. I have it on the H1 and I have it on the M15. Like those two are enough for me to see a picture. But if you want to use the TDI on the H4 also to give you some kind of confirmation, that also helps as well. But generally, like I said today in the session, I like to see that the TDI on the H1 is congruent with what's going on the TDI and the M15. If I don't see, if I like this right here, like this setup, normally this is your M setup. Let's just say, for example, you're taking a London pattern, right, a type 2 pattern or something like that, or type 1 pattern, and you're looking for your entry here where it crosses below the signal line, below the market baseline on this entry candle right here, right? So if you take this entry here and I look on the H1 and I see that the TDI is the RSI is like up here somewhere, I'm not going to take that trade. It's above the market baseline. It's not anywhere near where it should be in relation to what I'm trying to do. So if you see the RSI up here, like for me to take that trade, I have to see at least some kind of like curving down motion and a cross down over the TDI. It can be above the market baseline. That's okay. Because on the TDI, the larger time frames, it's going to move slower, right? Because you're zooming in on a section of the H1. So it can cross below the signal line. It can be above the market baseline, but I need to see some kind of movement downward if I'm taking a sell trade. If it's still pointing upward for me on the H1 and I'm taking a sell on the M15, then I'm not feeling as confident with that trade. It could give me a few pips down, but it could also bounce right up and continue upward. EMAs are also another thing. Is when you're looking at entries and we're looking at trades. I tend to not take trades where there's no room for me to take profit before the EMAs. Like, let's say I was taking entry here. Okay, if I took an entry here, I have this 50 EMA right in front of me. Okay, I have no guarantee that they're not going to just bounce right off this EMA and come back up. So I'm not going to take that trade until this closes below the EMA, and then I can take that setup trade. At that point, your stop loss is going to be bigger, but in that instance, what you do is you just take a smaller lot size, a smaller position. Okay, so you're still risking the same amount of the account, and you still can still make the same amount. Right, you're still going for a 1-to-1 or 2-to-1, but you're taking a smaller lot size, you're taking a smaller position, and you're risking the same amount on your account. Okay, does that make sense? Is there any time where you look at taking 50-50 on lower than M15? M5, okay. Good question. No, I don't. Just because for a continuation trade, you're really in the middle of the move. So once you get a close above the 13 at that point, and on like an M5 or an M15, like you're looking for like 5-10 pips, something like that. So it's not really worth it at that point. I would say generally M15 or above is best. Sometimes you can get big runners on M5. That's not a question. But if you can get a runner on M5, you can do it on the M15 too. So okay. Anyone else? No more questions? Okay. So I'm going to have this recording up on the website for you guys to go back and watch for those that did not, make the beginning of the session, or for those obviously that did not watch the recording or the live session. And that's pretty much it. If you guys have questions on this later, you guys can message me on the Telegram group, and then I will take care of those for you. All right. So good class today. Hope you guys learned a lot. And the next session we'll go over the other setup or new setup.
Thanks, Jeff.
No problem.
Thank you.
Thank you.